Which is better, DCA or stop loss? If we were to take a long position here on Ondo at a reasonable target here, let's say we think the price is going to come down to about $1.27, we can place our trade here. We're going to have a decent ratio, not 1-to-1. Let's try to go for something more reasonable, about 3-to-1. And look, our stop loss is below this low. It's also just below this low. This seems like a reasonable target for a stop loss. And we're only looking to make only 8%. It's not that big of a deal, so we should be able to secure some profit, right? We all know what happens next in crypto. Price absolutely tanks, destroys our destroys our stop loss, and it proceeds to pump right after that, hitting our take profit target. How many of you have been stuck in positions just like this over and over and over? My guess is a lot of you, and that's okay. There's nothing wrong with that. But what I think is actually a better approach is to use a DCA strategy. DCA stands for dollar cost averaging, and trading bots on AllTraded do this automatically. You can see all of these yellow arrows. These are all buy orders. The red orders right here are all sell orders. The idea of DCA is simple. We buy on the dip and we sell on the bounce every single time. Buy on the dip, sell on the bounce. Buy on the dip, sell on the bounce. It looks like another order is going to be closed in just a little bit. Using a bot to do this automatedly makes it way easier, but you can still use this strategy really in a manual nature on a chart. So let's go back over here. Let's say, and let's back up the truck, okay? Let's say, all right, I do want to enter a position here on Ondo, but zooming out, seeing that this chart has very, very wild movements to the upside, to the downside, I think it makes more sense to enter a position, but have a little bit extra just in case on the lower end, in case the price goes against us. And we're going to use this really cool indicator called the DCA calculator. It's a free one. It's linked in the description below. And this has a really cool feature where we can see and visualize what a manual safety trade would look like. So for example, I have an entry here at about $1.26, which I think makes sense. And I also want to be prepared if the price goes against me. So that's going to be this extra order down here, which is this manual safety. So I want you to pay attention to one really important thing. My base order size, this is the initial trade order size, is 10. My manual safety is 2 times that. DCA works best when you double down martingale style. And here's what's really cool about this. We're going to run the same setup again. The price goes way down here against us. But check out what happens. When our order is entered up here to $1.26, instead of us getting stopped out on a scam wick candle to the downside, we have an extra DCA order down here at support. Note how far this is to. We want it to be really low and really dramatic. We want to focus on capturing dramatic negative price action. When the price goes against us by 12%, it averages down our entry. So instead of us entering here at about $1.26, we are now averaged down at about $1.14. And all of a sudden, we have a great entry. We don't have to necessarily sell on the bounce right away because as this trade plays out, it does go up a bit higher. But the beauty of using a DCA strategy is that we could have that same idea of that same trade setup that we had before. We wanted to take profit at a meager target of like 8%. We can still have that take profit target here at $1.37. But with DCA, we are reducing our risk, and we're doubling down, and we're actually putting more into the trade as the price goes against us so that when we're taking profit up here, it's going to be for a lot more. I want you to understand that not every single crypto market condition is like green light for DCA. Right now, we're in a top year, and that means that I'm expecting Bitcoin to put in a new all-time high later this year. Because it's a top year, I'm expecting a lot of things to be moving up higher. So I am taking a buy the dip approach, meaning I'm using DCA to average into all of my entries for my charts. And if they keep going down, I'm going to sit on my hands and I'm going to wait for my take profit targets to get hit. DCA honestly takes conviction. You have to trust the strategy and you have to see it through from start to finish, just like I talk about in the Better Traders Journal that's shared and taught in our courses at the Better Traders. But before we go there, I want you to know that you can still survive and make a good chunk of change this year. And I want you to watch this video next. It's going to talk about why I believe that this is our top year. And next year, you're not going to want to know what's going to happen next. But watch this video next. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.